stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracey Ryniec, and I'm joined at the chairs by Sheraz Mian this week to talk about a fitness company, which is a growth stock, and one of the big banks. So we're going to start with you, Sheraz. You brought Planet Fitness.
Yes.
PLNT is the ticker. I'm a little dubious about the growth names right now, but you're saying that there's a strong reason to get into this one.
So you have to have the stomach for a company that is a fast grower. And Planet Fitness, every definition of a strong growth company. On the safety side in this environment, when everyone is running away from the growthier names, the redeeming feature and the safety feature is that it's a purely domestic one.
Okay.
It doesn't have the DOJ or the SEC or other regulatory issues that perhaps a Twitter or a Facebook or a Google may be facing.
Yeah.
It doesn't have the issues that an Apple may be facing with China slowing down or international trade. It's a purely U.S.-centric business with a very visible and clear growth profile. So for those who don't know, there probably are some, it's the no-frills gym concept.
Okay, this is the one that costs like $10.
$10, the basic membership, and very, very strong growth. The same store sales, their equivalent of comps, has been in this 8 to 12% range. It has been averaging about 9.5%, 10% the first 3 quarters of the year. About 30 to 40% EPS growth, about 10, 15, 20% top line growth.
Wow.
And the funny thing is that it's not a one-off phenomenon, even though those growth numbers have been around the last few quarters. One could reasonably see that this growth trend could continue for quite some time. Nothing lasts forever. So it's a franchise model, decent system they have in selecting franchisees. And then the fees they charge there, the fees for customers are very, very low. And then they have this so-called Black Card, which is a bit of a premium membership concept. So they have been steadily kind of upselling the basic membership to those higher value membership level, which gives you some additional benefits. So you could go to gyms in a variety of different places and some other merchandise sales as well. So very strong numbers, a very strong performer, as I mentioned to you earlier. It's been in the top 10 and a standout performer in that portfolio. It was the second best prior to its Q3 report, which was on November 5th or 6th, something like that. And then it went up like 15, 20% on that earnings release. So if you are a value-oriented investor, you perhaps would be a little hesitant. It's not cheap.
44 times.
That's right. But it's a very fast-growing company, and as I mentioned earlier, doesn't have some of those fear issues that perhaps would push you away from the FANGs and other tech companies.
If I was interested in getting in, should I wait for a pullback that may come after, because it just had this big surge after the earnings, or it may not come too? I don't know, but should I wait?
So a lot of the folks that have been burned by the tech sell-off and have been looking at the non-tech growth ideas, they have been eyeing the stock, but it hasn't really pulled back. So the risk is that you may totally miss out.
Okay. Well, I'll be keeping an eye on it for sure. Well, I have been watching it every time we've talked about it because I would like it to get cheaper, but it never does.
That's right.
Not yet. Okay, so I brought a big bank, JP Morgan. The ticker is JPM, and everybody knows they're one of the top big 4 names. Still has the same CEO and Jamie Dimon, so you basically have to like him to like the bank, but a lot of people do. And it was just recently in the news because Berkshire Hathaway started buying shares of it in the third quarter. Now, they've always owned Wells Fargo, and Warren Buffett's always liked the banks, and so he dove into both JP Morgan and PNC Financial, which I think I've probably done as a top stock pick at least one time too. But JP Morgan, it's cheap still here because shares are kind of just trending and not going anywhere because people hate the banks right now. But that is also why Buffett got in. He saw some value here. But I wanted to put up the earnings estimates because it's looking real nice for them right now. And this is what you want to see when you're looking for a company on the value side even. So here in 2018, estimates are trending higher once again. It's supposed to be 35% growth this year on earnings side, which is really high for a bank, but a lot of that is because the tax cuts that happened. But looking at 2019, you're seeing almost a 10% gain there for 2019, which is a very nice growth trajectory, especially for a bank of this size, if this holds. Right now, the analysts are pretty bullish on next year, and we have those interest rates rising, so it should help them. But we'll see if this holds. But I like the earnings trajectory, and then I brought what the price and consensus chart looks like. And you can see, again, some nice growth the last couple of years here, just very consistent over the last 4 years. But as you can see, those shares aren't going anywhere. So this is kind of a buying opportunity, I feel, for those who aren't in the banking sector because they haven't been going anywhere. They're all relatively cheap. JP Morgan about 11.5 times or so right here. And you get dividends with these. So you got to kind of like the banking story.
I'm a big fan. I'm a big fan of the banks. In fact, the entire finance, from these big guys to the regionals to even the brokers. I think the earnings outlook for banks has never been this good. Coming out of the last great recession, they really squeezed out a lot of the excess fat that they had in the operations. And we've been waiting forever for interest rates to really go up. And that's really the problem that these guys are facing. But they have to eventually go up. And while you're waiting for that, you're buying a very quality stock like this at a reasonable price, which pays a good growing dividend. Very limited downside in my judgment. So I like JP Morgan as well.
Yeah, me too. I own it in the value investor. I don't own it in my own personal portfolio. So these are a couple picks that we both own in our portfolios. So that's interesting as well.
That's right.
Okay. So we bring these stock picks every week. You don't want to miss a single one. Be sure to tune in every week for the top stock picks so that you're getting all of our great picks. We'll be bringing them to you again next week, so we'll see you then.